Is homeowners insurance becoming the type of thing that too many people simply cannot afford? Real estate expert Rick Sadle with Keller Williams Realty and SadleRealEstate.com is with us. Rick, good morning.
Hey, good morning.
So we have a variety of different types of insurance, homeowners insurance, right? Big picture. What kinds are required, and what have you seen overall with premiums and rates?
Yeah, we have lots of insurance types. What's required really depends on whether or not you're getting a loan, right? People paying cash don't necessarily have to get insurance. I mean, most do because it's almost crazy not to, unless you're so wealthy you can afford to self-insure. But if you're getting a mortgage, basic home insurance at a minimum is required. And over the last 5 years, rates have just skyrocketed, right? A lot of people, especially first-time home buyers, are really surprised to learn how much the monthly payments are for their home insurance. Even veteran homeowners, people who've owned homes for long, many years, when they buy, let's say, a bigger house and they learn what the new policy is going to cost them, they're still shocked, right? So it's all pretty crazy right now in terms of insurance.
How about for natural disasters? Here in the Northwest, we might have landslides and such. It would depend on where you live, if you need flood insurance and so forth. What are you seeing there?
Yeah, I mean, like you said, depending on what part of our area you live in, there are a few different types of people get flood insurance. One of the big ones, right? If you live in a floodplain and you're getting a mortgage, the mortgage company will make you get flood insurance, and that can be really even prohibitively expensive, right? Things like fire danger can also really affect your rates or even the ability to get insurance, right? In fact, for a period of time, a couple of years ago, when we were having all those wildfires, insurance companies stopped issuing policies here in our area because the fires were getting too close to Portland. And actually, what that meant was we were unable to sell houses for it was 4 or 5 days. We couldn't close on houses because if the insurance company won't issue the policy, the mortgage company won't fund the loan.
That's fascinating. I'm glad you brought up wildfires. I was thinking of the rain, but you're absolutely right with the wildfires. Is there a time when you can actually drop a bunch of insurance? I'm assuming that's risky versus cost. You ever heard of that?
I mean, here's the thing, and that's a good question. That's the big question. It keeps getting more expensive, like we talked about. The more claims they have to pay out, the more expensive it's going to get. And whether you believe in global warming or not, right? We've had an incredible amount of fires and floods and hurricanes nationally across, like the last 5 or 7 years. Even on Hawaii, which has less tropical islands, we've had massive fire damage recently. And so the bummer is you can't drop insurance if you have a mortgage. It's in the contract. If you do drop it, the mortgage company is going to go out and get it on your behalf and then charge you for it, which is going to be really expensive. So even if you don't have a mortgage and you do drop the insurance, a disaster strikes, it could cost you so much you can't rebuild. So people are kind of between a rock and a hard place.
Got it. Yeah, you don't want to not have insurance when disaster strikes, right?
Right. Yeah.
Yeah. Okay, Rick. Good info on insurance stuff. Appreciate you.
Yeah. Thanks.
That is Rick Sadle, real estate expert with Keller Williams Realty and SadleRealEstate.com.